So Pete Navarro, right, just a couple of days ago was telling us, CNBC, quote, tariffs are going to be a really important part of the tax cut discussion. A 10% tariff is about $350 to $400 billion in revenue. So you can see the beauty of that in the negotiations, and you can almost imagine sort of the glint in his eyes, right? I mean, this is Mr. Tariff, Pete Navarro. I mean, basically, without getting into whether tariffs are a blunt tool or even the right tool, I want to ask you, in terms of tariffs being available or used to offset tax cuts, does that work at all? Because the government primarily gets tax revenues from corporate, also individual taxes. Tariffs only account for 2% of government revenue. So to go from 2 to I don't know where, that's a huge ask.
It is, Martin. Thanks for having me back. And so we at the Peterson Institute and other independent institutes have looked at this. If you really do an across-the-board tariff, meaning almost all industries, almost all countries, and you maintain it for 10 years, which is the way the budget gets calculated and assessed in the U.S., you can credibly get a direct revenue effect of on the order of 1.5% of GDP. That's a big number. But as you point out, it's a fraction of the total tax revenues in the U.S. Total tax revenues in the U.S. run normally between 17 and 20% of GDP. Corporate taxes are somewhere between a quarter and a third of that. So this is not going to get you it. In fact, it's not even going to offset in direct terms the extension of the 2017 tax cuts, which the Congressional Budget Office, and again, a number of other independent people have suggested would run you on the order of $4 trillion up to $5 trillion over 10 years in additional deficits.
What are the global implications of all of this? And I want to bring in your experience as an external voting member of the Bank of England's Monetary Policy Committee, and we have seen some wobbles, haven't we, in the gilt market. What, Adam, do you believe the global bond market is telling us? Is it reflecting a non-trivial risk of a policy error?
I think, Sri, it's reflecting a non-trivial risk of two policy errors. One has nothing to do with Trump. It's that the Federal Reserve was premature in narrowing its focus just to unemployment and ignoring how little contractionary effect their supposedly tight monetary policy was already having on the U.S. economy. And they were ignoring how much R-star, the equilibrium trend growth rate, trend interest rate in the U.S. had gone up. And so I think the markets are already pricing in, rightly, as I've been warning about for some months, that the Fed isn't going to cut as much as they think, and that the Fed is possibly going to have to raise rates because they got the inflation forecast wrong. Then on top of that is this Trump issue and what it's going to do in terms of creating uncertainty around the world, diverting capital flows. And in the short run, it may lead to a boom-bust cycle in the U.S., similar to what we had in the mid-'80s, where you have loose fiscal policy, tightening monetary policy with a lag, threats against trading partners. You guys are too young, but we've seen this movie before. And that's a world in which the dollar gets overvalued further after already starting off strong. That's a world in which you have a boom and then a crash in the stock market like we had in '87. And that's the scenario that I think is the most likely scenario for the U.S. over the next couple of years. You throw on the geopolitics, which also drives people abroad to put more money in the U.S. As a self-defense measure. And that also leads to further dollar overvaluation, further overheating in the U.S. And then, of course, China and Europe and other places do have their own problems.
Adam, if I could just come in here, we just have to wrap up the conversation, but suffice to say, is the US stuck with a strong dollar policy, like it or not? Is that the upshot of all of this? The US is exceptional, it's the best house in a bad neighbourhood when you consider what's happening with the fragility of the Chinese economy and the problems in Europe. And are we perhaps heading into another round of currency devaluation and a race to the bottom, if so?
I think the way to think about Sri is everything you said is right, and we were already there. And then the Trump policies are going to exacerbate those trends and make it even more precarious, which tends to make for a bigger fall when the fall happens.